Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday. It is April 23rd, 2012. We'll be looking at the U.S. markets today and show you what I think is going on and something you definitely need to take into account. If you're long this market, you shouldn't be. And we've been warning about that for the past several weeks now. So, moving right along, we're looking at the Dow Jones Industrial Average, and what we see today is obviously a continuation of this downtrend. We talked about this before. You had this move up here to a nice sell pressure. Note the low point here. Sell off and jump up here again. Get a lower series of highs. So I attempt to take a short here, but it doesn't work out. We get stopped out by a couple bucks before she ends up actually breaking like we expected she would anyway. But the main thing was this low point here, lower than this low point here. This tells us that the overall trend is breaking down. You're starting to see it fail here. You're getting a series of lower lows, and that means that the buy pressure is walking away or backing away, and that's allowing stocks to fall lower. Then we get this move back to the upside here. We're looking for a short opportunity. We try it here. We get stopped out a couple days later. Then she comes down again. We're thinking about it, but we don't take it, and now she confirms here. So we're going to go ahead and mark it here as being we would start shorting at this point or lower. A stop set off this high here, so that's our re-entry into the Dow Jones Industrial Average short point there. A couple of different things you can note about this. Now, overall, you're looking at a very bearish signal. You're looking at a head and shoulders formation here. You got the first shoulder forms here. The head forms up here with kind of a double top and it comes down here forming the neckline. We'll update the chart later this evening to show that. And then you've come up here and formed another shoulder, and now you're rolling over. Closing below the neckline, this black line I'm going to draw right here, closing below that will confirm that head and shoulders formation. You would simply take the distance to the highest point of the head down to the neckline and measure that out, and then take that and subtract it from the breakout point. That gives you an idea of how low this thing is going to fall. Measure this out, and that gives you an idea of how far it's going to fall. This is not a small thing. This is a big major market peak, and it's something that you should definitely be aware of. Anyway, in shape or form that you want to analyze this, there's nothing bullish about this chart. Let me show you a couple of other things. We've talked about this in the past. There was no hammer candlestick formation here like you had back here. When you get a hammer that's telling you some buy pressure there, you expect to bounce. You get next day higher high, higher low. There can be a buyer there. You can take advantage of that. In this case, we didn't have it, so we got all cautious about that. Down here, we didn't have it again. We warned you, this jump up here is not real, and now she's rolling over, breaking down. So we're totally confident on our sell side here. Also, you can look at this low point and this low point, this high point and this high point. Obviously, the direction is down. The trend is down. There's no reason to be long here. Again, today's activity, look at this candlestick formation, not a hammer candlestick. If we take these three candlesticks together, all we're seeing is that bulls had pushed up here, bears had sold it back off, and you took this day, which was a sell day, a buy day, and a sell day. Bears are stronger here than bulls. And this is important because it coincides with the 50-day moving average. This red line right here, that's an important level. Whenever you're in a bullish market, you'll find support at the 50-day. When you're in a bearish market, you'll find resistance at the 50-day. That's what you're seeing. So everything on this chart tells you the same thing. This isn't my opinion. This is technical analysis, all telling you the exact same thing. Don't be long. Take a quick look here at the NASDAQ. Same overall picture. You've got the first shoulder formation, the head formation. I'm not sure where to draw this one out yet. Maybe here and then much like this. Or it could also be drawn out like this, and we haven't seen the other shoulder formation yet. Not sure on that, so just ignore that. Just something I'm keeping an eye on. Main thing here is we've been bearish from the peak here. Been shorting this guy, advanced the stop down to here. We got stopped out. She jumps up here, reverses back to the downside. We go short again, stay short, and we had her stop here. We were not stopped out on this one here, and she came close to it but failed at it, and she sold off again, now closing again below the 50-day moving average, this red line right here. All these signs are bearish. There's a couple different things you need to note about this, though. This particular candlestick, that's a hammer candlestick. So was this. Whenever you get those, you can get a reversal to the upside here. So some people will try to trade this on the long side, and I totally understand that concept. At the overall picture, if we look at the overall chart, not this little short-term thing that I'm drawing right here, this is obviously a downtrend. It's a very short-term trend right now. But if you look at the overall picture, you see this high point, this low point, this higher high, this higher low. Even now that we've had all this selling, we still get a higher low. So some people will buy this expecting that this uptrend will stay in effect. The Fed will do whatever, markets will drive higher. That's a logical argument. I can totally understand that, but there's a couple things you need to know. Let me clean that chart up. What you need to know about that strategy is that A, if you're going to buy, you'd want to wait for confirmation the following day. The following day gets a higher high than today's high. If you can break above that without gapping up here, because you don't want to chase it, but if you get just a regular day, gives you a nice little move to the upside here with a higher high and higher low, you could buy it with a stop set right there off this today's low. That would make sense to me. I would understand that. However, there's a couple things you need to know. Number one, this little support right here just broke down. So this support is quite common to find them then become resistance. So a move to be a buyer here, to start to see it move going higher, I don't expect a lot of upside before you hit that same resistance you've been falling and fighting and falling away from. So I don't expect a big move to the upside here, and that's why I'm not going to personally go out there and try to buy. That's why I'm going to pass on this opportunity. I might get stopped out and on the short side, and then bulls will be right at this point to be long. It's possible, but there's something else you got to think about. Let's assume for a moment that you are right, and that this is a great buying opportunity, and somebody were to buy here the next day with a stop right here, and she starts to take off. What happens if Europe's problem isn't solved? Then you're going to get the exact same thing that you saw with Greece. If one day it'll be great news, next day not so great, the third day, oh, we're totally wrong, it's not good news at all, it's all horrible, and then down she goes, falling again. So that's another reason why I'm not going to be really bullish at this time, not with what's going on in Europe right now. So that's the overall picture that I have for this. I'm still short. I would actually probably advance this stop here down to the high of today, even though we've got this big gap, so it's highly likely that we'll get stopped out. But we could get more bad news out of Europe and just see the markets tank even further. But all in all, it's just something you should be looking at. I'm going to pass on any strategy to go long at this time because of what's going on in Europe. Similar story with the Russell 2000 Small Cap Index, but not exactly the same thing as what we just looked at with the NASDAQ. Here's the thing that you got the serious high points here, low point, fails, falls lower, comes up to it again, fake breakout, falls apart, fake breakout, pulls back to support, fake breakout, falls again. Major resistance right here, obvious, okay? Then we break down here, we get a lower low than we had back here. That tells you the uptrend is now in question. You were starting to fall apart. And this isn't the first time. Back here you had a low point, a higher low, then you broke it. Now we come up here, reverse it, and you come back down, we break it again. Still no hammer candlestick formation here, nor here. So all this stuff was telling you, and there's a problem, you need to stay away from it. But some people were trying to be bullish anyway. In this situation here, we shorted it, we got stopped out shortly thereafter. We shorted it again, and that one held, and we're now in the money. But this time around, we've pulled back down, and we see a hammer candlestick formation. All right, let's analyze that. Do we want to be a buyer of this because of the hammer candlestick? I wouldn't, not because the hammer's not right, and the hammer is right. The problem is the overall trend is now down. You've got this low point here, a lower low here. This high point here, a lower high here. She's in a downtrend. I would not be a buyer trying to call the bottom of a downtrend at this point. Some people will, but I'm just not going to. And again, if your logic is this is my reasoning for doing it, I would understand that logic. That would mean the very next day, if you get a higher high than you got today and a higher low, you could set a stop here and be a buyer, but that's the only way you want to trade that. A really tight stop. Again, I'm not going to do that. It's best to always trade with the overall trend, and as I've already stated, this trend is obviously high point, lower high, low point, lower low, or you can use this one. In either event, you've got an obvious downtrend here. You also notice that back here you close below the 50-day moving average. It was a warning. You jump back above it, you find support at it, you jump up here, you pull back close to it, and again at it, and then you just fall apart. Now we jump up here and we find resistance at it. That means your trend has changed. Not bullish, you're now bearish. A quick look here at the S&P Large Cap Index. Overall trends, we talked about this before, higher highs, higher lows, moving higher, everybody's happy, and then we get this little problem right here. Notice here's the 50-day moving averages red line, and then we close below it. Big bad warning sign. Then you get this jump up here, and then you fail at the middle Bollinger Band line, pull back over, and you close below it again. That's what, 1, 2, 3, 4 times now. We've closed below it, getting a sell signal right here as well. We talked about that last Friday. We're short this, we'll stay short. You'll notice this is not a hammer candlestick. Even though there's a wick out of the bottom, it's not long enough for it to be a hammer. The wick must must be twice the size of the body at least. So that's an important thing to note if you're new to this and you don't know exactly where the hammer candlestick is defined. This is a hammer candlestick formation, and this is not. So we still see this as in a downtrend. You've got a series of lower highs here and here. You haven't actually broken this low here, which you've noticed back here. You got a little bit higher, but again, we told you it was not a hammer, so it wasn't actually the real bottom. So we expect this will keep rolling over, and we expect this right here to be the line in the sand. If you pull back down here and then after a couple of days you get a hammer candlestick, something like that, and you don't break that, then maybe you've got something developing for a reversal or something like that. Right now I don't see that. I think instead you'll probably go down here and close below that line, and that will totally destroy any potential for a short-term reversal back to the bullish trend, which a lot of people have been calling, expecting the Fed to be the savior of everything out there. The real problem is Europe, and that's going to be something you're going to keep an eye on. Right now, I just wouldn't be taking any risk you didn't have to take. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend, aka share our videos online. God bless, take care, enjoy the evening, and I'll see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.